The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 7th, magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on it, 877-927-6648. Internationally, 727-445-1044 on this magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 83 points, trading at 17,090. S&P is up about 5 at 2005. Composite up 9 points at 47.26. Russell 2000 up 11 points, trading out at 10.93. We've got gold back $8, trading at 12.62. Not a good thing. Silver, you might say $8, make bucks. I don't remember the exact number on it, but getting real close to saying sayonara baby. Silver off 9 pennies, trading at 15.61. Light sweet crude up 2 buckaroonies out here. That is headed to higher ground for sure. We'll go take a look at it. Let's do that right now. Then we'll take a look at other things. So light sweet crude 38.05. Look at this. You got a wide ranging bar breaking out of the consolidation box. So the consolidation box says anticipate $42, $41 to $43 as its next move. You've got finally you've got a break above its daily TAS market profile. Old resistance, which is what it should be, that's priced out at 36.28, ought to now become new support, 36.28. Oil's going to be trading higher, or if it does trade higher, what are the markets going to do? They're going to be trading higher. If you got oil trading higher, and you've got markets selling off, futures markets, buy that dip. Find some pattern that is out there. Buy that dip. You got a 75% chance of being right. It's not that often that I can come give you 75 and 80% odds of being right out there. You use stops and appropriately. But this is interesting because we're going to find out sooner than I thought, because 38.50 is the number. 38.50, we're at 38.04 here. 38.50 happens to be the weekly bottom of that TAS market profile. So is it going to find that as resistance? And if it does not, and it gets into above 38.50. You've got the point of control at 39.61. It is set up as a bullish box out there. And that means that you can see light sweet crude easily target 41.80 to the 43 level out here. That is the break of that consolidation box. If that's the case, and you're looking to short the market, and before you see oil reverse, you only got a 25% chance of being right. That's not the kind of trade you like to take, is it? I don't see it. I do not see it out here because I do see the correlation between light sweet crude and the markets. Well, you see it too. Here's the chart, right? Look at the chart. There's your 30-minute correlation chart out here. We were just taking a look at the daily. The statistics I gave you are on the daily basis. For goodness sakes, look at what the 30-minute is doing since 8:30 this morning, breaking above profiles. The 30-minute profile boxes on light sweet crude keep forming at higher levels out here. Was not the case inside the ES Mini, but even buyers and sellers, even that supply and demand line of those profiles could not hold back price. Why? Because Jed Clampett, has got that bubble in crude. moving to the upside out here. So we'll see what happens at 38.50. We'll see whether or not price can get above that level out there. Back to the markets out here. Where are we? Sorry, my charts are just a little bit discombobulated. So let's go back. So we've got that moving higher. You've got moving to the upside out here. You've got Biogen BIIB. That's up 3%, up $8. The IBB also to the upside, 868. So why is the NASDAQ having so much trouble out here? Apple back 95 cents. Maybe that's a little bit. It's got to be more than that. Martin Marietta trading 5% to the upside, up $7. Tesla's up $6. Intercept Pharmaceuticals up 6. Illumina up. So you got a lot of the bios, obviously, to the upside. To the downside, individual stock-wise, Score, SKOR, ComScore Inc. down 33% to Rooney. Wow. That's a big move to the downside. 6.8 million shares. Wow. Big volume to the downside. Gapping to the downside. I don't know if they were out with numbers. Let's see. What were they doing? They announced something out here. What's sinking after 10K? I don't know what was in that 10K, but it is. Let's go try to figure out what buyers and sellers are communicating to you and I. So this thing moving down with big volume. Let's just turn those profiles off. They are just not providing us with any information out here. And let's go hunting around to see if we can find any volume anywhere on this equity. So this thing had broken out back here. We can see where the breakout took place. Now, the breakout that took place was not with anywhere near the volume that we're seeing this breakdown. It was back here right around February 2014. You know, it had like about 1.7 million shares back then. That was big volume, and today you've got 6.8 million shares. So we just have to put this on a longer-term time frame. But basically, this thing is looks like it is toast. Here's the volume bar where this is headed back to. So you got to go all the way back. This is a monthly chart we're looking at. SCOR, my apology, is the ticker symbol. It's headed right back to that volume bar from the trading month of August in 2011, somewhere between 1250 to 2229 out there. That is a stinger. Also to the downside, we've got Google's off 12 bucks. So there you go. So we got Google down 12, Amazon off $11. So let's go try to figure out. Because it is all about the NQ still. I know you probably don't want me saying that, but, well, it's actually about the NQ and the Dow. So you got the Dow up 82 points. Here's where things get a little bit dicey as we figure out what the markets are communicating to you and I. If we look at the 4 futures indices right now, we can see, let me just blow up the NQ right now. We can see that you've got potentially doji number 2 in a row out here. So you got doji number 2 at resistance. Remember, doji candles, they mean the most to you and I at resistance. They don't mean diddly at a support level out here. But at resistance, they mean something. We have had 4 trading sessions with small-bodied candle, only one of those being dojis. You got high wave candles, the other 2. That's March 2nd and March 3rd. What do high wave candles mean? They mean the market has lost its way. Well, we know that. We can see that. Stalling after that nice little session here on March the 1st. So price has not been able to take out that TAS market profile high on the weekly basis. Now, the good news is, potential good news, is that support isn't that far below. You've got support down at around 42.64 because you've got a brand new daily box out there. Let's go to our man Garo from California. Garo, thanks for calling. Thanks for holding. How are you today? Our great Kodiak Island, Garo.
How are you, sir?
I am doing very well, thank you. How was your weekend?
Very well. Excellent. Excellent.
You know, Garo, I apologize. I didn't see that we were going right to the break here. So hold on. We're going to come right back to you after this break, and we'll take a look at TNA.
Yes, sir.
We'll be right. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 78. S&P is up 4. Now we're going out to Agaro in California. I believe we're going to take a look at TNA. Is that what you wanted to take a look at, Garo?
Yes, sir. TNA is the same as IWM, that Russell 2000, except this is the directional 3 times fast. So the price is very good. I can buy 1,000 shares at a time. So what I'm looking on TNA, it's going to go up. It can go up all the way to December 14th, 2015, which it closed at $60.74. What is your idea?
Where can this head to? So if we take a look at the IWM, so we'll take a look at both of them. So the IWM gave us a great pattern out here when it made its bottom. Go ahead.
It's the same pattern. They mimic each other. IWM, I think it comes to $111.11.
Sure.
And this one is $60.74. I needed your opinion.
So, and that's why the IWM, so trading TNA off of IWM sometimes gives us some better input. The triple is a great vehicle, especially when there's a trend, and you cannot argue that there has not been a trend here over the last couple of weeks, coming off of that wonderful price relative strength divergent bottom back here on February 12th. Now, the question specifically with regard to TNA and where it should head to, if you watch this on TigerTV, you're looking at the price oscillator chart in the middle of my screen up here. We can see that in the IWM, it's very close to the 0 line. If it gets so we want to really pay attention to it. Now, Garo, that is the difference between the 19 and the 39-day exponential moving average. In the case of TNA, I have that same calculation on my screen out here, and that is right now at minus 0.68. If for any reason, so let's take a look at bullish and bearish case. Your question was, how high can this go? And we'll take a look at some of those options. But what we want to really be careful with is that if for any reason before that price oscillator, the difference between the 19 and 39-day EMAs, turns down at any point in time before zero, that is a huge sell signal. Anytime when the price oscillator is riding as it is, it's bullish, rising. When it's above zero and it's rising, it's super bullish. When it moves up to the zero line and turns down, and it turned down, for example, today, it would need to close below 47, about $47, so about $47.11. It's probably not going to do that. But if we did get that kind of message, that would be a major sell signal. Now, with regard to horizontal levels of resistance inside TNA, if we look at market profiles, there are none there. This says TNA has support at $51.92. So as long as it closes above 51.92, then there are many different areas that we can take a look at. You use the December 15th level as your price target? Can I ask, why did you choose that day? It's not lined up with the moving average that you use?
Yes, sir.
It is. So it's a moving average that. Which moving average are you using at that area?
Not a moving average. Not a moving average. That's where you see there is a gap. The close of that candle, and if you go straight line, you'll see that there is a gap. There is a gap on January the 4th. There are
Absolutely.
two candles, and then on top of that is a big gap. I think it will come and stop at that two candles where the line goes to the right to the close of December 14th.
Yeah. So no question, and gaps are our friend, because gaps provide us with great information, either gaps to the downside or gaps to the upside, because in essence they're wide-ranging bars. And so you're absolutely right, Garo, that the 60.55 to 63.53 area could be it. No question about that. If I take a look at just retracements here, another measurement tool from the November 30th high down to the low, where we saw that bottom come in on February 11th, right at that 60.85 level, 61.08 is your 0.618 retracement level. So that says that should be the target area where price is headed to. It may go ahead and repair that window, close that gap, get up to 63.53. So that certainly is a possibility out here. The question is going to be, so yes, I see exactly what it is that you are looking at. And the only other thing that I throw out there, and we'll talk about it during the show today, is you still have this rising price oscillator that is below the zero line. And if for any reason that thing turns down below zero, on top of the additional tools that I know that you use, that would be a major sell signal. I'm not saying that's going to happen, but we have to always watch those levels.
Yes.
We've got to watch both sides of the trade.
Absolutely. Not necessarily. It may not happen at all.
Yeah.
But then
exactly.
I look at the TCA. The TCA is the opposite of that. If the TCA starts to roll up, then it gives me a confirmation that TNA is going to tank. You see, one has to go up, the other one has to come down. It's like UCO and SCO.
Absolutely.
The UCO, I'm looking at $11.74. And the way you said at the beginning of the program that the oil can go up to 41, between 41 and 43, this can go from here, which is $9 to $11.74.
Sure, no question. Now, the thing that I throw out here, this is going to be interesting, because what I can tell you is I had been looking for this move that we're seeing off of the lows, and we're long, to be a counter trend move. And it very well may be. But what I can tell you is that also for the last 84 years, the annual pattern is that the market makes a bottom, the Dow specifically makes a bottom at the end of January. January 20th was low. We had another test in the early part of February. And then from there, the markets move higher into May. So I said, well, maybe that pattern's in play. This chart here that's on my screen, this to me, this covers, Garo, all the U.S. stock indices. So the upper left panel is the Dow, then you've got the S&P, next to that the composite. Then on row number 2, we've got the Russell, which is what you're talking about, the NDX 100 in the middle, the transports to the right. Then we got the Wilshire 5000, we've got the New York Stock Exchange, and we've got the semiconductors in the bottom right. The long-term trend lines are intact. The Dow is right now trading pretty much right on it, but everything is intact out here. The transports never broke the trend line. New York Stock Exchange, a little bit. So we've got these trend lines that are out here, and there's a trend line inside of the Russell 2000, and maybe that is where price is headed to. And, in this month here, that could say about 1162. So around the 116 area inside the IWM, give or take that range. So another thing that you could do with regard to TNA is, if I can find that chart here, is probably put that same trend line and take a look at that. So let me do that right now for our viewers, and we'll just go ahead and make a red line. And so for that trend line, because it's another possible target area, it comes right into your gap. So you've got another level. If price gets above that, price moves higher into May. All right, my friend?
Yes.
Absolutely.
Very good.
Thanks for calling in, Garo. I appreciate it very much, and we'll look forward to speaking to you soon. That was Garo in California. So when we get back, let's go look at some of the non-confirming signals inside the market.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. High-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we got the Dow leading the charge here to the upside, straight out at 17,063. Garo and I, we were taking a look at IWM, TNA, TCA, whichever ones you want to look at. We're looking at those gaps. We're looking at those trend lines as being initial targets where you could run into some real resistance. But when I take that, and the question is, is price going to be able to get all the way up to that level? And it may, but there's some problems in River City. Those problems being right now the Dow. So when the leader out here, percentage-wise, maybe the Russell might be leading percentage-wise today. My tabs are a little bit messed up here. I was doing a workshop for some folks over in London before I started this show here, so I haven't had a chance to go back and put things in their right working order. But when I take a look at the Dow right now, hopefully you're watching us on Tiger TV, you're looking at the advanced decline oscillator on the bottom of my screen. That's the blue squiggly lines that you've got up here. You're looking obviously at the price, and you're seeing divergent patterns out here, all divergent patterns that have led to a decent correction. Some more decent than others, and it says we've got none of them, though, when we see this divergence out here has resolved itself in a good way. The divergence has to be broken through, and even on a day like today, it's just not. In a day like Friday in the Dow, and a day like Thursday, look, there was some nice selling or buying that came in towards the end of those sessions. But see here, when you've got price rising, take a look at you had price rising back in 2014. You had price rising back, and when I say rising, it was back in December 2014. Your normal move into the January lows. Remember, markets make lows at the end of January. In 2015, it happened to be February 2nd, where the market basically moved higher, and then it. But along the way in moving higher, we had two of these patterns that formed tops out there, right? Price moving higher, not getting the confirmation, because you had a declining tops pattern inside the advanced decline oscillator. And that's what we have going on right now. And it is not that far away from the zero line. They make a big deal about the zero line, as Garo and I were speaking about inside the rising price oscillator. You turn down before it, and it would tell you real trouble. Should tell you real trouble. Good enough with regard to being able to take a trade. When you don't have that, you just have to be aware. It's like having a traffic, it's like having GPS with traffic and knowing where the dangers are, where the potholes are, and that is one potential pothole. Well, here's a second potential pothole out here, and it is the Dow. So we really want to keep. When I say it's always about the NQ and it's stalling, the NQ stalling up at resistance. Light sweet crude getting up to the bottom of the TAS weekly box out there. I think 38.50. That could be a stalling area. That's going to be real resistance. And even though so many people, when I hear so many people in the media, they're looking for this to be a counter trend rally. Everybody's looking to sell. That's when I start looking the other way, which is why I went back to those monthly charts to say, well, maybe not so fast out here. Maybe we've got to get people on the other side saying, yeah, this market is just simply going to keep moving. And then you and I will look for these other patterns to complete. Now, there is a pattern here. Let's go see if it's completed. There is a true double bottom pattern that is inside the how do we know it's a true double bottom pattern? Because the prior swing point was taken out. You don't know if it's a double bottom. Here was a test of the January 20th low. We saw, in essence, a test of that on February 11th, right? People would normally call that a double bottom. I don't know if it's a double bottom or it's a consolidation. The only way that I know is when the previous swing point gets broken. So in this case here, before that second bottom, you just go back where your eyes take you, the previous swing point. That was February 1st. As soon as we saw the price get above that February 1st high, that old resistance should become new support. And then we just simply, all we have to do is to determine our measured move. Measured moves are basically equal to or greater than that level, right? So this says that the Dow could actually make its way up to 17,526. This divergence, by the way, can go on for a long period of time. Look at when it first began to form, October 8th, 2015. It didn't actually complete that divergent pattern until November 9th. November 9th we're talking. So we're talking 30 calendar days out here. This one began forming on February 25th. This could go to March 25th out here. We're only at March the 7th, right? So it could go on a bit higher, longer, and price could make its way up to the 17,500 level. How will we know when that is not going to occur? That advanced decline oscillator will go ahead and get below the zero line. There's another element that we'd have to take a look at, but yeah, I won't go into that at the moment. So that's one thing that is missing because I just was coming right from one workshop into the show today, I haven't had a chance to look at the VIX. Let's go look at the VIX index. Let's go see what it is doing out here. So we got the VIX is rising a bit, right? So we had the close here. You had the close here on Friday, 1686. And today, right now, you're trading at 1756. The key number, perhaps, on the VIX here is going to be 1826. So you're at 1755. 75 more cents or so. 1826. If we close above 1826 out here, it doesn't have to be today. Let's say I don't want it, but if you close above that, if oil stalls out at the at the bottom of its weekly profile, if the IWM's price oscillator turns down, if the Dow gets below the zero line of advanced decline, the signal would be, guess what? Some type of retracement. We don't know. You never know when you take a look at a top out here. You don't know if it's a top of consequence, or not. Just like we took a look at back here, we took a look at these divergent patterns. These were just decent retracements back here in 2014. Of course, the last one here in May 20th or so, that turned into one heck of a decline there. But I don't think in the top of May here was anticipating the Asian contagion that was out there. So I see I've got a question inside of the Tigers Den. Let me see here. It says, assuming S&P EH continue in rally mode another 4 weeks, where's the ideal low risk ESH buy? Okay. If we take a look at that, what I would do is the following. So what would I do? The low-risk buy is going to be, the way I'd first answer that question is the low-risk buy is when the NQ gets above or closes above its daily or weekly market profile. So let's go back and take a look at that chart. Because until that happens, the market is not on solid footing. So index, where are my indices? Give me a moment here while I search. There we go. So when I take a look at this chart suggests the following. This suggests that the ES mini ought to go to 2079. So it's a good question to be asking, where would be the low risk entry? And so that would say a pullback, quite frankly, to 1974 that holds. That would be pretty good. That would be one way. If the market takes off from here, though, you see the Russell the NQ doesn't have that much work to do to get above resistance, 43.57. I just don't think that we can. I don't know that starting a position now would necessarily make sense. However, if the NQ pulls back to 42.64, I'll give you the retracement level to buy at. 42.64, the new daily TAS market profile. That's where you could go ahead and take a stab at it. But when we look at this, this is a problem. This weekly point of control, so close to the top of the box out here. We're in a dangerous. And now look, I'm long the market, but we're in a dangerous area. I know that. I recognize that out there. So during the break here, I'll look around, see if I can answer Z's question to Dan, maybe try to find anything else. Of course, another retracement would be some type of wave count to the downside, and that doesn't look like that's going to happen anytime soon. I'm referring to that 7th inning stretch. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Fireside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 46 points. S&P just slightly negative. Now, during this 30-minute segment that we started here at the bottom of the hour, a brand new 30-minute market profile appeared on the screen for light crude. So this provides us with some additional information to assist in asking that question, hey, where's a good spot to buy the market on a dip inside the ES-Mini S&P 500? Now, we know, or at least I know, you know as well, you can trust me on this because it's accurate. It's math. Go do the math as well. We know that the directional correlation between light sweet crude and the S&P 500, 75%. And it's been 75% in essence over the last 4 months. But it's so that means out of 6 trading days, 4 of those 6 trading days, is that 75%? I think that's pretty close. I say 6 trading days because we've got the futures, everything, 5 days, 6 days, however you want to look at it. We've got the futures market open Sunday night. All right. Light sweet crude, the brand new profile that just popped up here shows that it may get up to 38.50 that easily because you've got resistance now on the 30-minute time frame at 37.96. Getting above that, this stage of the game would say 38.50 is going to take place. Getting above 38.50, we're back to the 41 to 43 range out here. This would say that the sweet crude is potentially going to pull back to 36.72. Point of control, closer to resistance. If it's not taken out and starts to move below 37.65, then 36.72 is very likely. Again, above it, nothing more bullish than getting above a failed bearish pattern. It's not so much that this is a bearish pattern, but we're in the box area here where sellers are the ones that are in control. So you've got that going for you, potentially as something to be concerned about. If I look at the Dow, right, we looked at the Dow daily. We looked at the advanced decline line. Now we're looking at the 2-hour chart for the Dow futures contract out here, the equity futures contract. And we've got a couple patterns. It has a couple patterns that says, okay, be careful. First, you've got that nice rising price channel. There's nothing bad about that. And it says unless price closes below that rising price channel, then you've got problems. If you pull all the way back to the rising price channel, the bottom of it, and you hold, that would be your buy point. You could probably time the Dow doing that to the ES Mini. You break below that, and it wasn't a buying opportunity. It was a selling opportunity at the top. Right now, we're more towards a selling opportunity up at the top. That advanced, I'm referring to short-term trading, by the way, at this stage here. 2-hour chart, we've got a price relative strength divergence pattern that occurred. We saw a little pullback. We are now in wave number 7 out here. It looks like maybe that pattern has gone away. I'd have to check something else. If we see the Dow futures and I'm just going to give you the number as I speak right now. So 17,038 minus 17,038 plus 50. So be 1780, 17,088, 17,088. So this says that if the Dow's trading below 16.5. I'm sorry, I got to add the right numbers here. 16,956 and 50. That would give me 17,056. We're at 17,037. So right now, this is giving me a sellish type signal out here. We just got don't be surprised at this stage. What we're looking at, do not be surprised if the market pulls back overnight. That seems to be its message out here as we speak right now. That's what I am seeing. Don't necessarily let that affect your longer-term trading. Not until we start to see closes below those rising price channels is there really any problem out here. So I hope that's a long way of looking at it. But and then I would use the VIX also as a that we discussed with regard to those levels as being a gauge as to what the market is doing as well. Okay, so that takes care of that. Let me go see what else is moving inside the marketplace out here. Let me try to get back to my main panel. There we go. Okay, so in the main panel out here, let's take a look at some things that are moving to the upside and to the downside. Let's look at Biogen leader dollar-wise, only up $6, up 2% out here. Here's the daily chart. Nothing to really blow your skirt up. Let's go see what Biogen is doing. Let's turn on our market profiles, see what we've got, see if there's some levels of support or resistance. So really showing us what? Just sideways trading range. Says limited upside potential. That would be about the 275 area. You're trading at 269 right now. And downside potential, limited downside potential right now, says that would be at the 247 area. So leader out here in volume today, light. You're doing 992,000 shares, pushing into 1.6 million. Says light. Let me try to see if I can pull up my straight line calculator so I don't have to do it in my mind where I would totally mess you up. So it's almost 2 o'clock. So we've done about almost 4.5 hours out there. So let me just change that, 4.5. I don't think we're going to be anywhere near the volume as it's going into that swing point. So we're at 993. I take it back. That says 1.4 million shares. That'll have, yeah. So it's light volume. If Biogen BIIB closes inside 268.66, you're likely to go ahead and get a move up to that 275 level. The IBB, what does it equate to inside the IBB? I would anticipate we're going to see something similar out here. If we take a look at a little bit less in the way of strength, that's run right into resistance out here. What do I mean by that? In this stage, I'm just using our profiles, right? You've got the top of the daily box, you've got the point of control for the weekly, and that says the IBB is struggling here at the 271 level. You're trading right now at 268. Closing above 271.18 would be bullish enough to say that this could move up to 302. That would put that would get the Nasdaq moving. But really, that's what it's got to do. And it has a little bit of resistance at 284 as well. That is the biotech sector for the Nasdaq. Let's look at Apple. I don't generally look at Apple out here, but let's go take a look at it, try to get a feel for what it's doing. It has a brand new profile that showed up today. It looks similar to light sweet crude, I guess, in one sense. Apple has some upside resistance right at that 119.86 level. You've got a bearish box that has shown up here. This is the daily chart, and this says if we see any close below 100.35, more likely than not, we are going to see a move down to the 96.10 area, and that is on Apple. With light sweet crude doing what it's doing, let's go take a look at some of these other stocks out here. ExxonMobil and Chevron. I think our man Brent is in Martinez, California. I believe he is in Chevron, right? CVX. I believe he had some August calls on this. So we were taking a look at this stock having the potential to move quite a bit higher out here. So Brent, if you're listening in, you've got nice action today. 7.7 million shares taken out of prior swing point with 10.2. 7.7 million shares could equate to about 11 million. So you're coming into that swing point with similar volume, getting above it with potentially more volume. That's good. What does this say? This says Chevron very likely going to go hit up to 93.93. And more likely, I would target really the swing point from November 3rd. Now, it may just tag the bottom of that, which is 95.42. 17 million shares, that's going to be the key. If you're coming into that with volume, then Chevron, CVX, should head up to about the 98.64. I think it was CVX that he had the calls on, but might have been ConocoPhillips, too. I don't recall. It's one of the C's out there. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 59 right now. S&P is flat. Composite is down 15. Russell 2000 is the leader in the clubhouse. Now, that's always good. That's always bullish. That's a bullish message for the market. My assumption, I shouldn't assume it here, my assumption is the Russell 2000 is leading the 1000, but let's go find out for sure. So $RUT divided by $RUI. So we're looking at the ratio between the small caps And they now got to turn this into a line chart. And the large caps out here, well, shoot, you can see it's rising. And that always bodes well. That's a positive message. That's a bullish message for the markets out here. When the small caps outperform, so it's subtle, but it's really helpful. So got a candle chart, the line chart. I think, of course, this is just on closes. It's a strong move. Definitely a strong move that is underway here inside the Russell 2000. As I say, it bodes well, and we'd find out soon enough. Garo and I took a look at some numbers inside TNA. You can do the same thing inside the IWM. So we would know soon enough whether or not this is a false move to the upside inside of the markets, inside the Russell. You got to be cautious. Sometimes we have to be more cautious than not. We just have to be cautious. What does cautious mean? It means have your trades in place and go ahead and use stops out there. Okay, so we looked at Chevron. Let's go take a look at the Qs. What kind of volume do we have inside the ETFs out here? Are we a light volume day? Sideways move. So today inside the Qs, 15 million shares. Now, 15 million shares. Let me see what that equates to. So you got about 15. That says you do about 22. Remember, you and I took a look at the volume matrix inside the Qs, average volume over the last 10 days. We said we needed probably about 5, 6, 7, 8 days in the 20 million type mark out here. Well, March 2nd, you were at 29. The next day, 25, 31, probably about 20 today, 22. So we still need a little bit more light volume inside of the Qs out here, but no conviction. But we knew that just simply by looking at what it's been doing for the last several days out here. So for the market, in order for the market to move higher, it's waiting on the NQ to determine what it wants to do. Let's look at a couple other stocks out here. Let's look at Google, see what it's doing, because it is trading lower. So it's a drag inside the Index 100. It's down about $20. That is down 2.7% out here. What do we know about Googly? Looks like Google, if it doesn't hold 707.68, it is going to go test the 694 area. As it does that, it will be getting into its most recent swing point low. It's so-called double bottom, a test of its previous swing point low. So you have the swing point out here from January 20th. That had volume of 4 million shares. That was tested and rejected, 4.4 million shares. So it was tested and rejected on slightly higher volume. Now today, you're pulling back with light volume, 180. You haven't gotten down to the top of the swing point, right? So that's really where we're looking for information. And that is the price level of 687.68. And so far, the low today has been only 710 even Steven out here. 4 million is the number. You've done 1.8, 1.8. So it looks like you're actually coming in with light volume, right? 1.8 says you do about 2.6. But it hasn't tested the swing point. We really won't know until we see how that swing point gets handled. But as we speak right now, you've got light volume coming in into that swing area. That is on Google. Amazon is back $14. And looks like our show is over. So stay tuned today, folks, to David White. He will be up next. Amazon, by the way, should have support at about the 548 level. Then, of course, we've got the Tom O'Brien Show from 3 to 5. Have a magical, magnificent, marvelous Monday. And I'll see you on Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.